This is Commodity Wrap. I'm Tony St. James. Well, Wednesday wraps up with lower trade. Even though some of the markets tried to turn things higher at the end of the session, it was lower. Corn lower pretty much the entire day. I've got a feeling our next guest may mention crop conditions near a 9-year high, maybe. What about soybeans? Soybeans lower for the third consecutive session, and soy meal following that trend. However, bean oil moving higher. All three wheat exchanges in the red. Cotton market was higher. I mentioned a couple other markets here. Oats turning higher, and the rice market turning higher as well. Brian Hoops is president, Midwest Market Solutions. Before we jump into the others, maybe why am I starting with rice? And the reason is U.S. and Japan have struck a new trade deal, and as part of that, we hear that Japan will open their market to U.S. rice. So we're watching a rally there. The question is, Brian, can that spill over into other commodities?
Well, I think it did. When we talked this morning on our TV segment, Tony, we talked about how that's probably the reason that soybeans were seeing a bump overnight. And really there wasn't much else to explain that rally was about. And I think by the end of the day, the funds were back in selling meal, selling soybeans, putting pressure against those markets, taking them off of their session highs, and kind of telling us that, okay, it's great that we may have some additional export business to Japan. However, we still have a huge crop that is looking like we're going to see being harvested here, and the weather looks real good. So you mentioned 9-year highs in the corn and soybean ratings. There's just not much on the radar that tells us those ratings are going to change anytime real soon. It looks like, this week and next week's going to be very hot, but there's been some moisture along with it. Crops probably are going to thrive for a while. And then after that, for most of the early part of August, we're looking at cooler conditions and back to maybe a more normal seasonal type conditions for the temperatures and rainfall patterns for corn and soybeans that look to keep these crop ratings near that 9-year high level.
Okay, and I have to admit, I stole that from you earlier this morning, the crop conditions at the 9-year high. Over on the wheat side, again, just lower across the board. Wheat just can't seem to get much going. I mean, one day it'll move higher, and then we pull it back. Is there anything at this point that wheat is waiting for?
Well, it just really isn't anything to get too excited with for this wheat market. Like you said, one day we're higher, the next day we're pulling back. It's a very choppy market. It's a market that traders really don't like because it's not trending. It's not a trending market where it's moving higher or even trending lower. It's just kind of a sideways, choppy type market. So, what is there really incentive-wise to buy this market? Our exports are okay, but we're not really tightening up ending stocks. We don't have weather threats. You just kind of go down the list, and there just really isn't anything to say, hey, this is a reason we have to step in and buy wheat, or a fund trader has to step in and buy wheat. The dollar's been trending higher. It was down a little bit today, but overall, the uptrend is in place in the dollar, which doesn't bode well for wheat for the most part. And you have big carries in the market, so there's just not an incentive out there to step in and buy this market.
Now, I will mention a market that's trading near 14-year highs. This on some tightness in the spot market and growing interest in alternatives to gold. We must be talking silver. Silver and gold both in lower territory near the end of the session, while copper moving higher, platinum lower. Any thoughts on the precious metals and industrial metals, if you will?
Yeah, interesting that you brought up gold and silver, their relationship, because most of the early spring, when we had some issues with the stock market in March and April, gold was really the one that got bought aggressively because of inflation concerns, and that market pushed, that $3,500 level. Silver was higher, but not to the extent gold was. It was kind of more of a follower, and since we've kind of peaked some of this gold market out and the stock market started to move back higher, In May and June, that's kind of been reversed, where silver is the one pushing higher and making new highs, and gold has been more of a sideways market. It's still strong, around $3,400, but it's the silver that's taken over the upside leadership role here during the summer months.
Yeah, and of the four I mentioned, gold, silver, copper, platinum, would have never thought this, but gold is the weakest performer. It's up 29% year to date. Silver is third. It's at 36% year to date. At number two, copper, 47% higher year to date. And the top performer for the year so far, platinum, up 61%. We'll take a break. Be back in a moment. We're talking with Brian Hoops of Midwest Market Solutions. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. Our special guest today is Brian Hoops. Brian is president of Midwest Market Solutions. Brian, kind of an interesting day here. I'm going to back up. First off, live cattle higher, feeder cattle higher, hogs higher. That means 3 straight sessions higher for feeders, 6 higher for hogs. And now I'm focusing specifically on the August contract, 6 sessions higher there. Maybe a good place to start is we hit some new record highs. Places I never thought the market could go. Any surprise on your side?
Seeing these cattle markets, they just continue to turn higher every day. It seems like we have seen contract highs and strength, and anytime we get few profit-taking days or sessions, even a triple-digit down day, doesn't affect the cattle market that much. In fact, that probably just ushers in some new buying opportunity, traders looking for a dip in the market. Until this pattern changes, this market just wants to continue to march higher. And we've seen people try and pick tops for 6-9 months in this market, saying it has to peak out, and you have to get hedged. And I just can't get into that camp. We're aligning the futures with the cash. That's a good thing for the industry. Some of the deferred contracts are now catching up to where the cash is. There's for a while that I really was against hedging the futures because we were holding a $20 or $22 discount to the cash markets, and it just doesn't make sense to be an aggressive hedger locking in a deferred futures contract when the cash trade is so much higher. There's no benefit to you doing that. Now we're starting to maybe see a little bit of that shift in that pattern, depending upon where that cash comes in this week. If we're around 230, let's say, October's only holding a $6 discount now to the cash. Now you can start talking about maybe not everybody's going to buy this market, but we can maybe start looking at some opportunities to do some hedging as it aligns itself with the cash. That combined with the packer margins being probably close to $200 in the red this week probably tells us that we're getting closer to a top. I don't know if we're there quite yet, but we're getting closer, at least seasonally. The feeder cattle market usually peaks in very late July or very early August, puts its summer highs in, and we trend lower in the fall months. So there's maybe some signs that things are starting to change a little bit here, but can we pronounce a top is in the market yet? I don't think so, and I really don't even want to pick a top of where this thing may end up going towards, because that's really what the question that everybody wants to know is.
Okay. I watched some of this day 3 of the Summertime Classic video auction. 320 weaned steers, average 650 pounds. They went for $408. 100 steers at 575 went for $419. 80 6-weight heifers sold at $377. And I throw all those numbers out because that's kind of what we're seeing at. And again, this is video auction trade. But I think that's interesting, especially with a couple of big reports set to come out on Friday. Any thoughts on cattle on feed or the cattle inventory report?
Yeah, three reports coming out Friday. Cattle inventory, which we did not have last summer, but we're going to have this year. So that's, I think, something everybody will be looking real closely at to see if we are increasing any herd sizes. We also have cold storage. That's a monthly report, not usually a major mover, but cattle on feed also coming out. Estimates that I have at my disposal here, we've seen on-feed supplies around 99.1%, placements at 98.1%, and marketing's at 96.3%. So overall, it looks to be another friendly report with confirmation that numbers are tighter than a year ago, and we're not putting any more cattle into feedlots than we were a year ago. That's something that I think the trade will watch, is once we start getting a little bit more bearish reports, that's maybe when we can also start talking about a top or a peak in prices and maybe trying to get a little bit more aggressive about doing some hedging.
All right, Brian, if we want to visit with you one-on-one, carry this conversation forward, how do we find you?
Yeah, you can check us out online, MidwestMarketSolutions.com, or you can call me directly. That's 417-501-5132.
Brian Hoops is with Midwest Market Solutions.